What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor. Hope you're doing well. Coming to you today with an article out of Redfin. Homebuyer demand has dropped week over week as interest rates, mortgage rates have increased, approaching 7% now. The mortgage rate story is something that we've followed for a while now. Ever since the jobs data and then the bad CPI data, the high CPI, everyone's expecting the Federal Reserve to continue to hike rates, hike them potentially longer, more rate hikes than we were expecting. And then the terminal rate there, the market is baking in that the terminal rate will be higher than what the Fed has previously stated. Of course, we're going to know for sure at the end of March, in about a month here at their Fed meeting. But that is what the mortgage market is talking about. So we're going to talk about that. We're going to talk about interest rates, what I think is going to happen with interest rates here in the future, and then we're going to talk a little bit about home buyer psychology, and some got a little story at the end that I'm going to talk about. So getting right into the article here. Housing market update. Recovery stalls as mortgage rates jump. The article out of Redfin, they do this weekly update. Home buyer demand index, a measure of requests and tours. Requests for tours and other services from Redfin agents fell 1% from a week ago, the first decline after months of increases, and mortgage purchase applications dropped 6%. That's a pretty big drop. The 6% drop in mortgage purchase applications is very significant week over week. People can just afford less as rates tick up. Before we get too deep into this article, I wanted to pop over to the NEFCU, New England Federal Credit Union rates. This is where I usually go to see the current mortgage rate here in Vermont, the current premium. This is if you have the best credit available to you, 6.625%, far above the 5.75% that we saw, not even a month ago. So up almost a full percentage point, which takes away a lot of buying power. Something that I wanted to bring up here is they talked about how, all right, here we go. Redfin's demand index is up 17% from the low point. So even though they felt the demand for new homes, according to the Redfin index, fell week over week, it's still up 17% from the low point this fall. Pending homes continue to improve. They're down 18% year over year, but that's half of the 33% decline in November. So we're seeing things starting to trend down as rates continue to increase, but we're not near the low that we saw in the fall when demand was really crushed, when there wasn't many people looking for homes, when prices were at their all-time highs. Now prices are lower. They've come down off of their all-time highs throughout the country. Here in Vermont, I'm not quite sure. I don't think we've seen a very significant price decline, but certainly nationally we have, and we're seeing that in the data. But it's still so. Prices are a little bit lower. So even though rates are higher than they have been over the past few months, they're still the mortgage payment is still more affordable than it was at its peak. And they talk about that in this article here down at the bottom. You're kind of in the middle here. The monthly mortgage payment on the median asking price home. So this is the affordability. It's not quite the affordability index, but it relates to that. So the median asking price home with a 6.32% mortgage, which is lower than the best rate that you can get this week. So this is last week's data. Was $2,428, 3% below the October peak. So still below the October peak, but not below it by much. The monthly mortgage payments are up 24% from a year ago. So I want to talk now about what I think is going to happen with mortgage rates and what's going on. And in my opinion, we could be seeing mortgage rates stay high and stay elevated, above 6%, above 5.5% for an extended period of time. And this could become the new normal. It's kind of like what happened with gas prices. Gas prices have come down. They've come down well off their peak. But at least here in Vermont, gas prices peaked out for, that bottom level gas was around $5 a gallon, which was very pricey. And now I know in other parts of the country it was much higher than that, but now they're down to about 3.50 a gallon, maybe a little bit lower than that, possibly even 3.30 around here. But I remember as prices were falling and it hit 4.50, it hit $4 a gallon, that it felt much more reasonable and much more, it felt easier to fill up the tank. It wasn't so much of a burden. And I think it's the same thing with mortgage rates, where mortgage rates, they peaked out at about 7% when the inflation data was pretty bad, 7.5% over in the fall. Inflation data was bad. The Federal Reserve wasn't, they were expecting extreme rate hikes and they were expecting extreme tightening. And then as the economic data started to improve, the market started to bake in that the Federal Reserve was going to ease up on their tightening and ease up on their expectations. But now as we're seeing, worse economic data, or economic data that will likely encourage the Federal Reserve to hold their rates higher for longer, the market is baking that in with their interest rates, and I think this is going to start to become the new normal. Um, you know, Buyers are starting to adjust to these higher rates, and the 7% rate is no longer something that they haven't seen in over a decade. It's something that buyers saw and the housing market saw, just a few months ago. So I think that's becoming the new normal. And then the last thing that I wanted to say, that I wanted to talk about in this video, was I I have some new buyers that I'm working with, and they're first time home buyers who are renting right now. And I was talking to them about what the most excited, what they're most excited about when they're purchasing a home. And what they told me is that they are excited. One of the things that they're most excited about, there's a lot of things, right? They're excited for more space in their home. They're excited to, have control over the environment that they live in, as opposed to renting. They can change the walls. They can, update the home. Uh, they can start paying down their mortgage as opposed to throwing away money to rent. Those are all things they told me. But something that stuck out to me is one of the things that they were most excited about was not worrying about whether or not rent is going to increase, or that their rent will continue to increase. That certainty behind their monthly payment. They'll be paying more with almost whatever they buy. They'll be paying more per month towards their mortgage. Um, Obviously, they're getting a different product. It's going to be a larger property, something that better suits their needs. So it's not like they're paying more for the exact same thing, but they'll be paying more each month. But that monthly payment is not going to change because they're going to lock in on a 30-year fixed rate loan, which, you know, I think is a very, I think it's another driving force behind this market, where a lot of first time home buyers are people you know, who have had their rents increased pretty drastically over the past few years as inventory has remained tight. And a big advantage of purchasing a property and owning a home as a first time home buyer is having that fixed monthly payment and not having to worry about, is my landlord going to kick me out? Not you could be making your payments every month, but because they want to renovate the property, or because they want to sell the property and they want your unit to be vacant. You could be a good tenant, you could still be kicked out of your property, or you could still have your rent increased to a price that you don't want to pay, or you're not financially prepared to pay. So that fixed monthly payment is a big driving factor for a lot of first time home buyers. I mean, this was an experience that I had recently today, so it's not necessarily indicative of the entire market, but I I really think it is a good representation um, of a driving force behind buyers, that even despite these higher rates and despite prices remaining high in many markets, certainly here in Vermont, um, that buyers, buyers are still going to want to buy if they can, for many reasons, and one of them being that fixed monthly payment. Anyways, Liam O'Reilly, Vermont Economic Realtor. I hope you guys enjoyed the video. Let me know what you think. Leave a comment in the description. I love reading your comments. I learn so much from you guys. Also, I appreciate the support. Been getting a lot of love in the comments recently, so thank you for that. If you're interested in buying or selling a property here in Vermont, all my contact information is in the description. Reach out to me directly. I would be happy to answer any questions you have. If you're selling, give you a free market analysis, no obligation or anything like that. If you're buying, answer any questions about the home buying process, the market, anything like that. Reach out to me directly. If you're looking at another state, also reach out to me directly. I will find you a great realtor who knows what they're doing, either on the buy side or the sell side. Other than that, Liam O'Reilly, Vermont Economic Realtor. I'll see you guys in the next video.